Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, January 22nd, 2021. It's a little after noon Eastern Time as I'm starting the video. We're going to do an update on the energy stocks, particularly the oil and gas exploration and production sector. That's XOP is the one-time ETF. We're going to look at that, and as well as that DRIP alternative. DRIP is the two-time leverage short, same sector. I'm going to just do a quick update here on the euro just to start out, get that out of the way. No change really since yesterday. Yesterday we had this divergent high at the middle of the resistance zone there, that 121.94 level. I have a resistance zone that runs from all the way up. Oh well, now at this point in time you have 121.94 all the way up to about 122.36. So that was what I call my bounce target zone, where I expect this counter trend rally to end. Anything much more than that, as I said, is not going to help the bearish case, the near-term bearish case for the euro. But as of now, I think the the case can still be made. This is a counter trend bounce. We have divergence continuing to build, and we're going to get another leg down. And if so, that should help the energy stocks. It should put a headwind to most equities as a whole, and particularly the energy sector, because that should have an impact on crude oil. It's not surprising, the euro topped and the dollar bottomed recently right here. Remember, the euro down equals dollar up. And we also had crude oil, which of course is going to affect the XOP trade, XES if you're in that one, or XLE, or any individual energy stocks. I'm going to go through those in a second. So that's it. Crude also peaked right here. It tested that same level several times. That was a peak back then, right about when the dollar bottomed and the euro topped. And it's starting to, finally come down. We bounced today, the euro bounced, but overall we took out these recent reaction lows, so we have the makings of an early downtrend, and I'm still favoring more downside there to that 49.86-ish level, give or take. It's not a hard number, but that'd be about another 5% downside in crude, and that should, if we get it, that should definitely put pressure on the energy stocks. So let's talk about those. We'll just stick with XOP today. Remember, XOP is the one-time non-leveraged ETF for the sector. So this is giving you a better technical picture. I gave you targets on DRIP, but what happens when you have that leverage? I originally stated it as 3 times. It used to be a 3-time ETF, and a member on the site corrected me. They, like a lot of others, have moved down to only 200% leverage. You still need to take that in consideration with your position, because it's buy $10,000 of DRIP is comparable to shorting $20,000 of XOP. Still, just to reiterate, as of now, and this could all change, T2 is my preferred swing target if the trade pans out, meaning if it doesn't get stopped out. And I want to just talk about objective entry points. The post I mentioned today in pre-market, we're right here. We had a gap. There's a gap right there, and quite a few reaction lows there, or reactions on that line, and that's where we were this morning. So as I said today, we pretty much started the day in pre-market and at the open at resistance. So as I said earlier, the next buy signal will come, and it'll open the door for move up to that first target if and when we clearly take out today's highs and DRIP, which is the same as today's lows. So we're really right now, close enough at trendline resistance. There's your downtrend line and price resistance. By the way, that price is roughly, again, let's just say today's highs, because we had a little spike at the open because the sector gap down. And again, if you don't get the distortion from the leverage when you use the actual sector ETF. So we're going to focus on XOP, and I'll keep it brief. I'm going to rifle through the components of XOP, or at least most of them, and I'm going to give you my thoughts on it. It's going to jive with what I said this morning, whereas sorry, I had a phone call there. This morning I said we were at this trend line. I'm gonna brighten that trend line up a little bit now. Now it's valid. I called it a potential trend line this morning and recently. What I mean by that, well, in my book, again, it might not be in the textbooks, but in my book, you have to have at least 3 distinct reactions. Well, you had 3 there, but now you have a 4th reaction. That further validates that trend line. And so we got a reaction there, and so far it's a relatively minor reaction. In fact, all they did is close today's gap. You can see this. When you zoom in real tight, see the yellow lines right here at this point. That shows you where we closed yesterday. And so we rallied up, made a perfect backfill of the gap. If you're an active trader, gaps are magnets for traders. They often act, they usually are backfilled, not always, but often, and they often act as resistance when from below or support from above. So either way, so that's what happened today. We opened at trendline support, got the reaction, and I said this morning, and I still stand by that an objective entry would come on a break of today's lows if we solidly take out this trend line, and that still holds true. But there's also, it was and still is possibly, an objective short entry on a bounce. In fact, that's a better entry. If you're going to short XOP, it's better to short up here, assuming, of course, we're going down to these targets, than it is down here. So again, there's two objective entries. One would be a break of today's lows, and the other would be, we're close to the gap now. You could add here. If we happen to push back up to 68.93, remember that was support where I gave you the last buy signal once that was taken out. And so that would also offer an objective entry there. Prefer not to see that, but let me go through the charts and tell you we could. And it's possible this whole pullback gets bought up here and the energy sector goes to new highs. So the point of this video is to show you we're very close. And again, as I said, I think a break of today's lows. I can tell you from me, it would increase my degree of confidence significantly that this trade will go on to hit the pullback targets that I talked about. This right here, that 57.17-ish, is comparable to that T2 I gave you on drip. That's that same comparable level here, and that is at this point in time my preferred swing target. I mentioned this morning on one of the updates. Charts are dynamic, and so is my analysis. Depending on what I see. I could, again, a lot can happen. You get stopped out if the trade starts taking off to the upside. Could cover T1, but as of now, I think my current plan is to hold out for that second target there. Okay, so that's where we're at. If we take out today's lows, we'll have taken out this downtrend. Again, if we can do it impulsively, all the better. There is support not too far below, and we'll probably get a reaction off the initial tag of that level as well. That's why I give you those arrow breaks. I typically draw either arrow breaks or sometimes I'll show the, the counter trend. But an arrow break, if I don't show you the counter trend move, is where a reaction is likely, and then ultimately move down here. So that's how that could play out. And again, this is a 60-minute chart. This is what it looks like on the daily chart. Stopped right at resistance 75.53. That was our original objective short entry on the run into resistance. Okay, the rest of the video, and I'll keep it relatively brief, I'm just going to rifle through the charts. We'll only look at the daily charts of all the components of XOP. And on this daily chart, before I leave it, here's a downtrend line that I'm leaning towards a back test. So you can see the first support level is 63 on the daily, 63.51, then the downtrend line, and so that's where I may cover a short position on the sector. Sell drip. All right, individual components, because that will give you an idea of really where the sector's headed. This is the 800-pound gorilla in the sector, ExxonMobil. It is a component of XOP. It's also a component of top component XLE. In fact, XLE, it's even heavier. We're above trend line. I don't have a great trend line. I have to say that right now. There's 1, 2, 3 reactions. We don't have a fourth. We're above trend, but we have divergence. So here's going to be the common theme in this video as I rifle through these quickly. If I don't mention it, on almost each and every component XOP, you have a negative divergence on at least one of these two indicators below, the PPO or the RSI. In the case of ExxonMobil, there's no RSI divergence, but we just put in an extreme overbought reading. As I mentioned in a recent video, last time we were this overbought was back here, and you can see what happened to the stock then. Doesn't guarantee that's going to happen. It's just saying, hey, stock's overbought. Heads up, that's when a correction, the odds for correction are good. So far a rejection off that resistance level, 51.68, moving lower. And now let's look at the rest of them. Chevron Texaco, same thing, negative divergence. Here's your divergence line on both the PPO and RSI. Just like the positive divergence on almost all these stocks at the recent lows back in November, that was the catalyst for the rally that we've had, strong rally, the technical catalyst. And of course the breakouts and all that occurred. And also rejection off 93.63. But where I wanted to go with this video, because I went over these before, show you that some of these stocks are either breaking down, have just recently broken down, some today, some just the last few days, but the majority are either at or just above support right now. And that's again why I want to do this video, show you. Here's Chevron Texaco. This is a big one. If I say at this moment we're, if I zoom in real close, say, are we down below? No, we're actually back above. It wouldn't matter. We're in close proximity. I'm doing the video. There's another couple hours left in the trading day, or 3.5 hours left. Anything can happen. Buyers can step in here, and I'll tell you, if I was a energy bull and I thought we're going to get another thrust up, and look, we very well may. If it's going to happen, it's probably they're going to step in here, defend support. A lot of these stocks are at support, so if they can take these intraday breaks, those charts that I'm about to get to that are broken down intraday, and manage to close back on or above the trend line, well, those are, you can call them whipsaws or intraday whipsaws. I always warn, if you're a swing trader or a trend trader, if you wait for a daily close, it's going to increase your odds that breakdown will stick. You take an intraday breakdown, it's not unusual to see a lot of charts, well-defined uptrend lines break intraday only to see the buyers step in and close it back above. So there's one that is on the verge, and again, that's my common theme here. If we get a little more downside in this sector, XOP clearly takes out today's lows. Most of these stocks will as well, and that'll give you breakdowns on big stocks like Chevron Texaco and some of these others I'm about to go through. Okay, so go through a little faster. COP, as of right now, breakdown. It's below the trend line, and I could even tighten that trend line up just a hair. Yeah, that's it. So we are below the trend line. Again, you can't rule out a stick save at this point. A stick save is when the rally into the close, so the candlestick closes up above there. That's what we call a stick save in trading. Obviously different than a hockey game. And there's your target if you're trading COP. So there's a breakdown. So I'm going to give a check mark for the bears for this trade on this one. However, the first two I don't have check marks yet. Close on CVX. EOG breakdown. So there's another check mark. Again, how we close the day, how we follow through today, tomorrow, I should say next week, or we're going to go into Monday. But I'm seeing quite a few of these breaking down, and the further they get away from the trend lines, the higher the probability the sector is going to break down with it, with these stocks. So EOG breakdown, just like back here, you had a breakdown, little back test, another move down, another back test, and then boom, one of the biggest drops in years. So there's your sell signal on EOG, PSX, Phillips 66, breakdown, candles below trend right there, but again, only by a slight amount with several hours left to go in the trading session. MPC, breakdown below the trend line, right on that 44.12-ish support, but a breakdown, again, unless it can reverse into the close. There's another one with the sell signal today. VLO, breakdown right there. So far you see the theme now. The majority of these so far at this point now have broken down. And we're going to go through PXD, that's Pioneer Natural Resources, right on trend. So again, if you're bullish, you're watching my analysis, but you think I'm, doing the wrong thing by shorting the energy stocks, you step in and buy here. I have to say it's objective, and you can do it. You can trade any of these as individual stocks. You get more meat on your bone if you sniff out on the trade, if you get the most bearish looking stocks within a sector versus going with the ETF. The ETF is simple. It's a one and done for most people. And as I said, birds of a feather flock together. And odds are that if my targets are hit on XOP, that 90+% of these stocks are going to go down with it. You'll have very few bucking the trend. There's only one in here that looks okay right now from a charting perspective, and I'll get to that one in a second. So there it is. That one needs a little more work. And again, common theme here is, the point of this is, the more of these stocks that break down, clearly move below these trend lines, solid close below, says that we're probably going to have more downside to come. Whereas, again, there's some that are right in there, those that are broken down. If they can stick save it and get back above trend line, we may get another thrust up in the sector. XOY, I don't have a clean up trend line on this one, but you can see the divergent highs, just like you had a big divergent low right here. There is your breakout, very clear breakout, back test, and boom, that was a catalyst for this rally right up to resistance, negative divergence, rolling over off resistance. And again, I don't have a trend line there, but you can see there's a potential target, that's 1717 ish support. HES, Hess Corp, cracked intraday, but it's above right now. That candlestick, even though it's red, my candles are set to show, based on yesterday's, where it was yesterday. So we're still below yesterday's level. We're down on the day, but we've rallied back up above the trend line. You know what? I need to tighten that up. My bad. Some of these a couple weeks back when I started zeroing in on this sector, just did some rough trend lines. What I did now is I tightened it up, meaning I came to the bottom of this candle, bottom of these candles, and so that actually tells me see, when you move this charting platform, sometimes these lines move, give or take. There's no reason to split hairs. You can say we're under. If I do it like that, I roll it back, we're under. Depending on how I put it, maybe we're over. We need to get a little bit farther away from it, but I will say this is a breakdown as of right now, and unless the stock can rally back up and close back above the trend line, then that's just another one that's breaking down today. FANG, that's Diamondback Energy. There's the big reversal. So you went intraday yesterday and today, but both days managed to rally back. Strong buyers. Something happened with this. Must have been a headline, maybe earnings today. Up 4.31, bucking the trend, but still in a precarious technical posture. I would say this is still a bearish setup. You just don't have a sell signal yet. You need to break down below this trend line, and you need to do it with especially with a solid red close below it. But we're right back to the same resistance level we've been flirting with for the last week or so here. Reaction high there, and that was a few reactions there, and then once it couldn't hold this level back here, it had a big breakdown there, and the bottom fell out of the stock. So a very technically significant level. And again, so far, bullish price action today, rallying it back above that trend line in that one. And then NFE, New Fortress Energy, there was a beautiful breakdown candle. There's a good example of a solid red candle and nothing but selling since for the most part. So there's one that's clearly on a sell signal, and that's the target down there, 33.61. COG, I don't have an uptrend line, but we have a downtrend line here that rallied into resistance. Simple stuff, wash, rinse, repeat. Look at a stock that's running into a trend line, and if you're long, you sell when you get to the trend line. Or you turn around, if you also like shorting, you short the stock. And then you wait, if you're bullish, you wait for a breakout. That's what I can tell you. Whether it happens anytime soon or down the road, a break above this trend line will be bullish. We have quite a few reactions on it. And either way, I just wanted to say, as of now, rejection off the high. So that's where, it was the most aggressive entry, but the best short entry on the sector was what I mentioned a week ago today, or was it last Thursday, actually, I think, and then I followed up on Friday. All right, DVN, Devon Energy, breakdown right there. Clear uptrend line, nice clean, a lot of reactions, rejection off the 2023 level. And also what this one's done, this could be a little more longer term bearish implications. We had a nice downtrend line there, and the stock broke above it, but then failed that breakout. And as I often say, fewer things in trading are more bearish than a failed long side breakout. So we had a whipsaw signal. Anybody trading and took the breakout over the trend line wasn't paying attention to horizontal price resistance. So that's why I always say you give it the benefit of the doubt when you have two resistance levels in close proximity. You want to wait till the latter of the two is taken out. In that case, what Devon did is went up and hit that 2023 and then broke down. But like I said, so there's a lot going on there. The rejection off the trend line, the failed breakout above the downtrend line, and as of yesterday, you can see it closed below the trend line and it's falling through to the downside today. So this one's another check mark for the bears. So more check marks for the bearish case so far today. But like I said, there's still too many at or right around trend line resistance right now to say with the highest degree of confidence that the most price targets I have will be hit. CLR, again, common theme. So, when I say birds of a feather flock together, it is not random coincidence. So many of these same stock, completely different companies, are right at or very near well-defined uptrend line support, nor the fact that most of these stocks have also just hit well-defined resistance levels and did so with negative divergence. So, they all have very similar charts. APA, Apache, I don't have a clean up trend line, but this one was a rejection off the 1825 resistance level, moving lower since, negative divergence on both indicators. MRO, Marathon Oil, bearish rising wedge, rejection off a long-term downtrend line. You can see the downtrend line right here. Rejection there, and that 847 resistance level. And that's again why I thought, even before we had sell signals in the sector, that's why it was an objective short, because many of these stocks had intersecting or dual resistance levels, not just one but two. More resistance you have, the better. Now that also be quite bullish if these stocks power on through there, and the majority of these stocks take out those resistance levels. That's going to be bullish, and if they take out these divergences, that's going to be bullish. It's not what I think will happen now, but if it does, I'm going to tell you this: don't become married to any short trades on these stocks, because they could have a lot more upside if that happens. So MRO needs to take out the trend line. You can see it right there. Trend line's off the late October or early November lows. XCC, I don't have a clean trend line, so I'm not going to force one here. Same story. Again, nice clean downtrend lines on a lot of these stocks, and they popped them briefly but have failed that breakout. And again, so that is, like I said, bearish, the fact that we have that failed breakout right there so far. There is support coming up, pretty decent support too, around 40.24 on the stock. EQT, I circled the false breakout, nice resistance. You can see a lot of reactions along this line right here at about 17.18, failed breakout. HFC, was bullish when it took out the downtrend line, back tested there, back tested again, moving higher, but then it put in a divergent high. So this one, I suspect, may want to come in for another back test of that trend line. And there's a good chance if these trades play out, after that, the next time I'll be talking about these stocks down the road in a few weeks, maybe a couple months, will be long side entries. Last time I was talking about them bullish was right back here. They all had these positive divergences and bullish falling wedges right before the elections, and they broke out. I mean, that was a clean breakout. There's a breakout candle, and that one was good for about 51% since the elections. OVV, rolling off, just big divergence on this one. When you look at that, there's your big negative divergence. So if this stock, depending on what happens here, I've given you some targets on a 60-minute time frame, but if we see a lot of these stocks go on and break these support levels that I have, I can tell you that would be quite bearish to see this one break the trend line, and then more importantly, that you'd call that the BOD line, the 1247 support just below it. That would open the door for a much larger move down. So there's the potential there that we could see, multi-month swing trade on some of these. And I'll continue to do updates as long as the sector, the charts look clear to me. This one, RGI, Renewable Energy Group. It's been strong, but big divergence here, and it's holding up so far. And as the name implies, renewable energy, it's in this ETF, or at least it's coming up in this watch list. The charting platform, I have a watch list to the right. It'll show the components, and so you'd have to go to the company's website to verify this is an XOP, but I'm assuming it is because it's coming up in the watch list. But no sell signals on that one yet, above trend, but some big divergences building. So I think that one's probably will ultimately get dragged down with the sector if it continues to move lower. RRC, Range Resources, simple stuff. Negative divergence, divergent high 1, correction, divergent high 2, correction, divergent high 3, correction, divergent high 4, correction. So far, probably more to come. There's all your divergence lines. You can see right there. CNX, rejection off the resistance at 1421. We could probably stop here. I don't know if I have them all marked up, but I'll go through a few more. We're only at the 24-minute mark in the video. There's a beautiful breakdown. This is MUR Murphy Oil. There's your nice clean uptrend line, bearish rising wedge pattern. That's what you want to see. There's a breakdown candle right there. Big red candle, solid red close. More downside today, down another 4% after dropping there. Again, I believe I covered a lot of these already in a video. So if you had, a sell alert, an alert set on that trend line, you could have shorted the breakdown. You're good for about 16% so far since yesterday's breakdown into today's lows. And as I said, if you want to sniff out the most, or a handful of these individual stocks, like I said, with the most bearish setups, set of price alerts, if you have the time to manage that, you should outperform XOP to the downside, or 2 times. If you take the leverage out of drip, you should outperform. MGY, Magnolia Oil and Gas Company, above trend, yet to break down. SWN, Southwestern Energy, in a price channel. Again, bulls can use these levels. If you don't like shorting, buy SWN if it gets here. Buy it with a stop not too far below, because if it breaks it, that's going to be longer term bearish. But if you would, when you recognize a price channel, it's simple stuff. You go long at the bottom of the channel, and you book profits, or turn around and short at the top of the channel. Watch, rinse, repeat, as long as the channel continues to play out. World Fuel Service Corp. We'll stop here. There's still some. There's still some, I don't know, about another dozen components in XOP, but you get the drift. So in summary, quite a few of these have broken down, but quite a few haven't. I didn't count, and it's not really that important. I can just tell you that we have a lot at trend. If the energy bulls are going to defend these trend lines, they need to step in right now today. That's why I think, any decent downside from today's lows on XOP, let's say another 2%, 3% downside, will most likely have done the trick. It will most likely have taken those stocks that have not yet broken down, like this one, that are at trend, below that trend line, and it will help to confirm the breakdowns in those that have already triggered sell signals and broken down. And with the bearish posture of the charts, that's what I favor. If they happen to step in and defend it and run up here, and we get another high or another thrust up in the sector, I know this isn't the ETF, this is one stock, but same story. Then in another couple weeks, I may be revisiting this as a new short entry, or we'll go back to XOP, or an add-on. For those, if you shorted here, the last week around 71.50, you can easily have a stop up there if you're holding out for a lot more. So if we get more and more thrust up, all it would do is extend the existing divergences, unless it's much more than just a marginal new high. But as of now, to wrap the video up, I still favor the scenario I laid out, that we'll get a minor bounce here, any thrust up all the way up to that 68, we'll call it $69, still objective to add on to. If we go much above there, you might not want to add, because that's pretty good resistance. That was support, was broken, that gave us a sell signal, and ideally, for the bearish case, that should cap any bounce. All the better if we can turn around here and the bounce is muted, a relatively small bounce, like I said, and we can go on to take that out. Whether that happens today or next week, probably be that, but we'll see. All right, I'm going to wrap it up here. You have the levels to watch, and my thoughts. So it's kind of, I still think it's one of the few sectors that I feel comfortable shorting now, because the stock market remains tremendously resilient. If we get sell signals on the stock market, that will help this trade. But like I said, if my confidence will go up on this trade if today's lows on XOP are taken out. All right, this has been Randy Finney with the right side of the chart. Hope you enjoyed it.